Okay. So look at the cool swag I got. Bankers helping bankers koozie. And on the back, it has all this cool writing about built by a dear friend somewhere down in Texas with hope and pride for community banking.
Okay.
Is that cool? Hey, bet you didn't get one of those, did you? But I know a guy.
I'm Josh Rowland. I'm the CEO of Lead Bank in Kansas City. Lead Bank is a Missouri chartered bank, about $800 million in assets. Over the last, say, 5 years, we've really grown through our vast partnerships and FinTech support. And we see a lot more growth coming up in the future.
What's crazy, you guys, I remember talking and working with these guys when they're kind of getting started in this, and it was like, just tapping 300. We're hoping to get to 500 in the next couple of years. When you said 800, I hadn't looked it up, and it shocked me to hear that number. It's how rapid your growth has been. That's great.
That's great.
Congratulations.
Yeah. Well, and the thing about it, as bankers, the growth is not traditional kind of asset growth. And that's the whole difference. I think if we had grown that fast from a traditional community bank perspective with real estate loans, like we should be out of business. But because of the way that FinTech growth can work in terms of deposits and in terms of, these deposits back one for one, the credit that we're making through our self-financial relationship, it's actually the lowest risk growth you could even imagine. And so that's part of what's so amazing about finding the right kind of partners to work with.
You had a great statistic you were about to kill us with. Go for it, man.
All right. So I like to keep everybody updated, right? We are north of 80 Bass banks, sponsor banks, a little bit of what's to come, the rumor mill, right? There's probably another 20 to 30 that are in the process of launching their first FinTech. And that's some pretty good growth over, let's say, a year or so ago. Pretty staggering, actually. I would say, and keep me honest here, about 18 months or so, we've roughly doubled. Is that a fair ballpark?
Yeah, we got stuck at a weird number in there in the high 60s, low 70s.
Well, there was a lot of M&A.
Yeah, exactly. We started losing some and then, consult. But the cool part about that, people wanting to buy a bank that's, let's call it FinTech ready, right?
Yeah.
It's a premium factor now that's finally beginning to be recognized that, hey, this is something where I'll pay a lot more for that bank than I would for somebody else.
Yeah, we've seen a lot of that. And we've also seen FinTechs buying banks in the space, right? So that kind of from the bank side, a little north now, maybe 410, 420 on the FinTech side, right? And keeping in mind, these are the FinTech folks that are offering a banking function, but are not chartered institutions, right? So about 80 and about 400, that's pretty cool to see. And I would say of that 80, you've probably got about 20 or so that have, let's say, 3 or more FinTechs. So starting to see some scale there as folks get some years under their belt.
Well, and FinTechs that are picking multiple sponsor banks for different functions.
You bet. Cool. We're definitely seeing some differentiation.
So I got to tee you up here, man. You ready? All right. So I
Yeah.
watched the video of you, and you were talking about a geographic focus and a FinTech focus as opposed to a community focus that we ought to have. And I got to tell you, I couldn't wait. I ran over to Tanner's and I was like, Tanner, you got to listen to this. You won't believe it. He's been saying the same thing you have.
Yeah, I'm a huge fan. I tell everybody, I think, and a lot of it's regulatory driven, right? But we made a heck of a mistake in community banking, thinking about communities geographically. And I think you've got so much, especially in recent years, right? As we've all a little bit more woke than we used to be, right? Sorry, good joke. But we're all focused more on these. There's hundreds, if not thousands of communities of people, and they have a need and they deserve to be served differently with financial services.
What do you think?
Well, I mean, we're talking to the choir. I mean, it's really funny, when you think about the history of banking regulation and you say, okay, so basically in the Depression, all these little town banks were allowed to get FDIC insurance. But the mindset was keep them within their neighborhoods because otherwise it's too unpredictable. We'd rather have a bunch of big banks that we can control, but there's just too many damn community banks. Well, then, interstate banking goes, the changes in interstate banking law. And so all of a sudden a community bank can cross state lines. And banks did that without a question, right? There was never any question about whether a bank in Garden City, Missouri had a right to cross over into Garden City, Kansas. It was like, well, that's fine. But the reality is that because technology is really so affordable now, massive scaling technology is so affordable now. What is the purpose of that community mindset, of that geographic mindset? And instead, you have to look at who the community bank customer is. Who is the natural customer for a community bank service? It's Main Street. It's Main Street all over town. It is everybody that deserves a relationship with a bank where they can put their kids in there, they can come in, they can be known, all of these things. Well, that's true everywhere. And as you mentioned, Tanner, at the beginning, we've also watched the hollowing out of the banking industry. So you have areas all over this country that are banking deserts, effectively, like food deserts, where people cannot really get an affordable checking account. And they've been marginalized for a variety of reasons. But now we can reach them.
Yes.
Now using technology, we can reach them. Those are our customers. That kind of small business household, that is our customer.
Love it.
And so why not rethink it all, especially because there's just an abundance of technology that we can access, either off the shelf, customized software that we can use to reach people, and very affordable marketing at scale. Yeah. So I feel like it's the survival of the community bank. And to me, that's really become a passion of mine. Yeah. Because I think that it's the fabric of American entrepreneurship.
Yes.
That's where the small business gets their first loan. They don't get it from JP Morgan Chase. That $25,000 loan to buy a new vehicle, that comes from the community bank. Mm-hmm. So let's show them that we still can do that and use the tools available.
That's great.
I love it.
Hey, you said something a minute ago about just, it's a less riskier model, and to be able to grow your institution the way you've grown your institution, if you just tried it the traditional method, you'd have probably blown up the bank by now. So partnering with FinTech, tell us how you kind of got started in that. I mean, a lot of guys out there that listen to this stuff are like, so what's a BaaS bank? What's a sponsor bank? What the hell are we talking about? They're still at that level. And even the ones that are a little bit past that level, they get stuck at the boardroom. How do I find a FinTech? How do I, it's a common question I get all the time when I'm helping bankers on board and become this.
Well, like you said, they'll find you if you simply do some work. I say things that, are not necessarily the most tempered, but banks have got to start working for it. Banks have got to start working for it again. We're not entitled to it. And I think that there's a way in which people in the community banking world view this with some shock and dismay. Like, well, what do you mean? We have to do that. Our business is good. People love us. And I'm like, well, if you're not growing and you're in a shrinking market to begin with, you're really doomed. So eventually, and your shareholders aren't getting any return. So I think what we decided to do, our journey into BaaS banking starts with the real collapse of this bank in 2008 and 9. And my late father, bought the bank in 2005, basically not really thinking about it. And that's a whole other story. He was really smart, charismatic, sentimental idealist. And he loved underdogs, and he thought this would be great. He was retiring, he had some money, he bought a little bank. Mm-hmm. And he didn't really have any plan for managing it or anything like that. And the minority owners were the CEO and her husband. And they just weren't any good. And when they got his checkbook to grow the bank, they just grew it like this. And unfortunately, they put on terrible liabilities and terrible assets. So when the financial crisis hit and we had all these really high rate liabilities to pay, we didn't have any loans that could make the money. And so we hemorrhaged cash. We just were shoveling it out the door to our depositors. And I mean, we recapitalized the bank like effectively like 4 times. I mean, he bought it for something like $7 million. And then by the end of it, he had put $50 million in to save this little $25 million bank. I mean, that's the horror of a leveraged balance sheet, right? And total owner liability. Well, so I came in 2008, and it's just like, oh man, that it's really hit the fan. So what are we going to do? And I didn't know anything about banking. And I was like, well, what do I do? And the first thing was, well, you can't do any credit, so you have to find ways to get people to pay fee income for your deposit services. And we're like, okay, I just started going out to try to find fee income. And, I'm a bit of a do-gooder. And so I went to a conference from what was then the Center for Financial Services Education or Innovation, CFSI. It's now called the Financial Health Network. Mm-hmm. And I just saw all these people presenting that needed a bank. And I'm like, okay, well, we have nothing. We have no credit department. We have really, the only thing that I know we can do is build out checking accounts for business. So I'm like, okay, well, we'll do it. And that was Self Financial out of Austin, Texas, a really great partner and friend in James Garvey. And that was a paired CD and installment loan, 100% CD secured, credit building product, pretty low cost for people who had never had a credit score before. It's not really a credit repair product. It's really a credit establishment product.
Credit builder before it was cool.
Yeah.
Yeah. And I mean, if I was wearing my hat, I'd take my hat off to James Garvey. He recognized something. But what I also recognized from that is everything that Self is doing is our products. A CD and an installment loan paired. There is nothing to stop any bank from doing that. The difference is that they created a much nicer interface and user experience than we could do. We couldn't do it. And they had money to market on Google and Facebook. But that basically taught me something. It taught me that essentially our products are good. Our products are good. And nobody has taught me otherwise.
Right.
Everything that is being offered is essentially a bank product with better marketing and a better user experience.
Yes. Can I ask you a question? I'm sorry.
Yeah.
No,
I'm talking to you.
I completely agree. Okay. And they're from let's just say the vendor landscape, the thought leadership, the media, the folks that do the talking to community banks. There's really 2 schools of thought right now. And there has been for a number of years, if you think about it. Okay. One side is, I think my side, I am all for partnerships of all forms, BaaS specifically, whether that's on the lending side, the card side, et cetera, et cetera. And it is not, in my view, anything different than we've ever done, right? We're offering products and we're offering them to, let's just say, businesses who offer them to their customers. One click more on the hierarchy, and it's the same thing banking has always been. Okay, the other group of folks would tell you, do not get rid of, don't disintermediate your bank's brand, right? By partnering with fintechs, it should be your brand. Now, here's what I would argue. In the BaaS model, the bank does really what the bank is good at, right? Financial products, CDs, checking accounts, et cetera. And let's just say regulatory compliance, et cetera. And they partner with a fintech who does the things that banks are really bad at, which is marketing and software, right? Let them do the front end, let them do the marketing and have the marketing budget. We'll do the regulatory, the compliance, the back end, the financial products, be the charter, right? It just, like a light bulb, it makes so much sense. And I think there's a fear that has come from this concept of you're giving away, you're disintermediating customer experience, you're competing with your own brand. That's silly. Are you going to go compete with Google or, a really good software company? Of course not.
Well, you hit on something really cool there with, like compliance. Compliance is basically an investment that the bank is making into these companies. Do you agree?
100%. I have a slight difference though with both of those polls that you've described, Tanner.
Yep.
on the one hand, I think it's dumb for banks to miss an opportunity to keep growing out of fear that their brand is being disintermediated. Because the reality is it's happening anyway. You're losing it anyway. So what's better? You know, what is that phrase? Have them pissing inside the tent or outside the tent, or maybe that's not the right one. You want keep your enemies close.
If you can't beat them,
close your enemies closer. We're gonna have to edit that out.
I love it.
But the point being that we don't have the tools, and the fact is that the technology and those things are not they're not cheap enough. They're not ubiquitous enough to decide we're going to do that. And I disagree with you a little bit though about technology. Banks have been great at technology. If you think about what really has happened in banking history, we introduced the ATM, we introduced wireless payments, we introduced all of these things that online banking, you know, that's a function that was introduced by bad actors. They got it done. And it was satisfactory for decades. ATMs work. ATMs work. Credit cards work. That's all the old infrastructure and the old design thinking. And for a bunch of people now to come in and say, everything that you've ever done sucks, and what we're going to do instead is we're going to offer the same products on your rails, which we said sucked, but we're going to tell everybody that it's actually on this cool, slick system, but it's completely dependent. The last mile of the whole thing, or the first mile of the whole thing, is still the bank's connection to the Fed, or to the SWIFT network, or to whatever. So I'm like, okay, well, they think that. I think that actually banks win. Banks will win. Banks have won for millennia, and banks are not going away. The fact is, here's the question. What is happening to all these fintech neobanks and challenger banks and all the rest of it now that they don't have the cheap access to Facebook because of Apple's privacy restrictions? Where is anybody talking about that?
Right.
The marketing spending is going up, and the cost is going up, and the actual acquisition is going down. Both of those things are going in the wrong direction.
Right.
But what remains? The need for them to pay us for our banking services. And the fact is, to me, we do that as long as the opportunity is there. And the minute it isn't there, the minute we're big enough, like $1 billion, $2 billion off the backs of this, we're totally ready to do anything we want because we were doing it before.
Well,
So I basically have started saying banks win, banks win, banks win. And
I love it.
if you want to win, you play, and then you win.
My analogy to go with what Josh said is my little saying that I always say is whoever is closest to the charter wins.
yes.
If you look at the
That's right.
whoever's closest to the charter, you win.
Well, and the other thing, thank goodness you said this. I mean, whoever came up with the word legacy vendor, I would like to just beat their ass publicly. I think that's so stupid that we ignore they're the deliverers of technology that run the greatest banking system in the world.
The greatest bank in the world, the most diverse,
It's like
the most equitable,
yes.
the most accessible. I mean, and I'm saying that even recognizing that our industry has made terrible mistakes. We have not delivered social welfare. We have intentionally marginalized and discriminated against women, people of color, religious minorities. We have done it. But even with that being said, more people in this country have access to fair and equitable banking than in any country in the world, period.
Well, the greatest thing I think about the whole United States is that we have the ability to change and change for good. And this is another part of FinTech, addressing these underserved markets and diverse products and different things out there. Banking now has an opportunity to right a wrong, to do a good. And that's
do a good.
strength that we need to play to.
I completely agree. We've been taking these tours with our bank staff of an historical tour, audio GPS tour of Kansas City. And it's a segregation tour. It talks about the redlining in Kansas City. And we have a famous or infamous native son of Kansas City, a guy named J.C. Nichols, who helped disseminate the idea of racially restrictive covenants. And that became embedded into the Federal Housing Administration, FHA loans, mortgage guarantees in the Depression and a New Deal era. And so basically we went on a tour of this, and it was really an education about that. And I look at it exactly that way, that this is an opportunity through technology to find ways to serve people. And that is the mission of community banks, to serve people in areas that banks abandoned in poor, low and moderate income neighborhoods in Kansas City. And with ingenuity and with software and with data modeling and all the rest of it, I'm hopeful that we're going to find solutions to enable people to have access, affordable, fair access to banking.
It's happening. Look, Coastal is one of my favorites on this topic, and Eric Sprink over there, I think he told me that they have 15 that fit that sort of minority profile. And if you think about it, right, I won't name off minorities, but pick one that you have in your head that's in your local geographic community, and you might have 8 of those folks from that community that are in your small town.
Yeah.
It wouldn't make sense even with the most low-cost software to try and build a segment for that, right? But if you went nationwide, all of a sudden it makes sense. And so they've got a team that fit. And I tell this story a lot. A month or 2 ago, I talked to some folks that were building, it was Filipino nurses. That was the community that they were trying to serve. I would have no idea what their needs are. Right. And if I was running the local community bank, there's no way I'm serving them. Right. But I could partner with that fintech who is and provide the banking services and be the good guys and get a sliver, to your point.
This is what the Bass Association was formed for, is, there's a partnership between Bass banks that are trying to find new fintechs and trying to help fintechs launch that. Some of this is just a goodwill deed. I'll be your guy. We'll see if it works out. And then you've got fintechs out there that maybe they've been vetted by an institution and said, look, they're really good. They're just not big enough for us yet.
They're different types.
And kind of back to that point of how do we find a fintech? I've got lists of them that I can give to bankers. So we're trying to help make that connection there. We're also trying to do this let's do it in a responsible way, so that we're being excellent stewards of the compliance piece of this, not throwing a bank into a disaster, but also trying to make sure that the infrastructure parties that are at work in the middle processes here, that they're leaning towards following a compliance, not opening up some visibility problem downstream so a regulator gets surprised or a banker gets surprised by all this. This should all be above board, be easy to see, and fairly easy to implement. Do you agree with all that?
I do. And I really like the thinking about compliance and it kind of connecting the who's closer to the charter wins kind of thing.
He's going to steal that.
Hey, you can have it.
If you really look at these relationships, right, what do they need? Mm-hmm. They need compliance.
As a service, that's really what the charters provide.
It is. But the amount of BS, this was more true several years ago, where the idea that, if you had just technology and we took it out of the banking system, then deregulated financial institutions could do this much better, and compliance was clunky, and banks didn't even do it very well, and we're going to have machine learning and we're going to streamline all of this stuff. It's all going to be great. And that was when the first threats about, these fintech people are going to completely eliminate the need for banks. Well, what has happened? The reality is that compliance is the difference between bogus and real. It is the difference. And banks have it. And fintechs don't.
That's right. And here's the thing, even if fintechs had the compliance, they're not audited. They're not part of a regulated system.
That's really a better way to say it. That they have these people that are experts, but because they're not accountable in the same way,
Right.
they aren't actually the last stop on the thing. It doesn't matter whether we have a master service agreement with Self or with any of our other companies that say you're responsible for it. Everyone knows that the buck stops with the bank.
Right.
And that is where the whole thing lies. If they cannot get compliance from a bank that is well run, they are dead in the water.
Yes.
That's it.
And so that is where banks have to take all of the stuff that they've just viewed as a cost center and a pain in the neck and say, actually, our participation in a well-regulated American banking ecosystem is our value.
Yes.
Bingo.
Call it charter,
Bingo.
call it
Bingo.
compliance. That's our value.
I'm going to steal one of yours.
Okay, go ahead.
This is one that he says.
We're all getting
Okay,
excited.
look, think about the bajillions of dollars invested into fintech, right? And largely, I think, Josh, to your point, a lot of that is brought on this anti-bank rhetoric. Okay, the 80 sponsor banks that I talked to, take them off the board. There is no fintech,
It's over.
right?
Exactly.
And remember when he said that to me, I'm like,
I
Right?
told him, I said, this
It's
is the power
amazing.
grid. It's the power grid for
yes,
fintech.
yes.
You take the sponsor banks out of the pictures, the bass banks, and there is no more fintech.
The gateway
It is
to lending.
over.
Yep.
But here's the other thing, bankers, pay attention right here. This is the important part. I have heard so many bankers for so many years talk about, the cost of compliance, it keeps going up and this is a regulatory burden that we have to bear. Then monetize it. This is your moment in time.
Monetize it because they have to pay you for it.
Bingo.
They don't have a choice. So call it a premium service, invest in a premium service. And frankly, if that means that you sell a branch and reinvest that money in online compliance for BSA, AML, do it because you can charge a premium for that. You cannot charge a neighborhood customer walking in with their dry cleaning from their dry cleaning store and charge them a premium for compliance.
Yeah.
But all of these you can charge.
That's right.
And in fact, the compliance burden, it's a dream, a fantasy that somehow it's going to get erased. It's never going to go away because it is our moat.
Yes.
We don't want it to go away.
Yes.
I agree.
Yes.
Why would we want to lose that?
That's great.
Make it difficult for new entrants because I already know how to do it.
Yes.
I'm so excited. I'm tickled to death to have this chance to talk with you. I'll tell you what, when we put together the whole bankers helping bankers, it's an ecosystem. The BaaS piece of this, the banking as a service, that's a piece of it. There's also a platform for bankers to talk to each other. We've got all the different parts and pieces of showing bankers how to make money and how to do all this stuff. And all of this, like he says, freedom's not free. It's free for bankers, but it's really not free. It costs a lot.
We get sponsors.
Yeah. We get sponsors to help us carry the load and bring this out for bankers.
Well, because your fintech and your vendor community are reliant on bankers being able to do things.
The point is,
People are all over it.
if you need help becoming things like this, not only will we help you and not charge you for it, but people like Josh and others out there, there's bankers all over the place trying to help each other. This is such a
Absolutely.
cool moment in time. And it's like a grassroots thing that's happening where
It
the
is.
bankers helping bankers. It's really bankers helping other bankers. And everybody's trying to pitch in and say, let me show you what I know. And let me show. And here's what the coolest thing in the world. When you get a bunch of BaaS banks on the phone, and what's the number one issue? You're going to hear 6 different issues that have nothing to do with each other is the number one issue for that guy.
Mhm.
Because that's what his regulators are leaning on him about. And the regulators are leaning on, some other issue over here. And to hear these conversations and how this goes is so cool.
But community banks are nimble,
Yes.
right? And I think we've forgotten about that. I mean, look, if you just forgot about banking and stepped into an entrepreneurial mindset, which I think is something great that you said earlier, I've told him before, I think community banks think like franchisees rather than entrepreneurs.
I think when somebody said,
Yeah.
when somebody gave me that phrase of, you're essentially a franchisee of Fiserv, I was like,
Yeah.
okay, I'm going to fix that.
There you go.
I'm
Yeah.
going to stop that.
Yeah.
That's what I
think like franchisees on the technology and the reg and the compliance side, right? But if community banks would recognize that your size is actually something that makes you scrappy and nimble.
Yeah.
Right. I mean, you can rock and roll and do a lot.
I mean, nimble is our is the fourth word in our values as a bank. And it is one of the things that I really learned pretty quickly is that the big banks have no incentive to work with a young startup that has maybe $1 million of processing, volume. There's no incentive for it. And if you try to go through that, it's too bureaucratic. They can't ever get it done. Small banks, and by that I mean everything under basically $5 billion, we're tiny. The decision maker is an owner right there.
Right.
And that is an advantage. It is the David and Goliath reality of American community banking. We are the David, smaller, nimbler, underestimated, and we have all the powers.
Yes.
The fact is, if Goliath had a club, the fact is we are small, nimble, underestimated, and we have the same club that the big banks do.
Absolutely. Yep. And I'll leave you with one thought here. This is something I've been working over in my head. I think the big banks, especially the big four, in a BaaS thought process, it's actually diminishing returns even for the largest corporate clients. Think about JP with the Apple Card. JP has 68 million accounts, something like that. Okay, 62. What is the overlap in Apple Card?
A lot.
That they are now basically indirectly partnering, making less revenue than they would with those cards that they directly issue.
It was their card making the purchase.
So even the big four playing with the mega companies, the Googles, the Apples, it's actually a losing proposition of diminishing returns. This is cool.
Okay, so this is why we brought they made us do it, but bringing all the BaaS banks together, this is the most important part. And I really want to leave everybody with this great thought. Together, I mean, there's one of them that has 110 million cards. That's one of 81 of these institutions that Power Grid FinTech. They're bigger than the biggest banks by a mile. When they come together and speak with one voice, it's over, guys. You better pay attention to them.
Final thoughts, Josh. Shoot. Anything you want. I always tell everybody it could be NASCAR, man. Anything you want. Just final thoughts. Anything you want to say and talk about.
I'll just tell you what it is. Lead Bank is being acquired exactly by the kind of FinTech investment group. And we are planning huge expansion and growth, all on the the BaaS model, and really looking forward to it. And it's going to be game changing. And I hope, if there's ever an occasion, we'll get to see you again and talk about it. But we're ready to play. It's awesome.
Is it a FinTech that's making the acquisition or another bank?
It's a group of investors from FinTech.
Aha. So we don't lose Carter.
See, we
because we don't lose anything.
Carter and capital.
Yeah, and tons of technology resources. So we're right there.
So when we started this, and I was saying about you can get a premium for your charter.
He's like, I know.
Yes,
I know. That's awesome.
I mean, I'll tell you guys, this has been a family-owned bank, and I really thought I was having a blast. I really thought I would just keep doing this, but as family circumstances changed, it became necessary. But I couldn't feel luckier about the vision, the strategy, the direction. We've proven that we can do it on a shoestring. We've proven that nimbleness counts, that without any resources here in Kansas City, that we made a way for ourselves. And now it's time for the big show. And I think all of our team is just pumped like crazy to get to go do this and really show what we can do. So it's exciting.
What, Josh, if you get tired of fooling around with that banking stuff, you can come over here and help show these other guys how to do it anytime. We could use a guy like
that. Well, keep me on your list because life is long.
I love it.
Right.
Hey, congrats, man. That's super cool. I know the journey you guys have been on. I mean, you're forever in the Hall of Fame book, man. You're one of the OGs of all this. That's awesome.
just for talking trash, basically, I guess.
Love it.
Figure it out as you go.
Yeah.
I love it.
I love
Well,
it.
this has been, I've gotten to do plenty of these, and it's been totally great to talk to you. I mean, sometimes you talk to people and they just don't necessarily, I don't know, they don't have a point of view on this stuff. They're just asking you the same questions and like kind of wondering about stuff without actually being really informed about what's actually happening and what the deep causes of it are, and then how to separate kind of the superficial from what's really structural.
Yep.
So it's been a pleasure. I really have enjoyed this.
I had a blast. I'd love to drink a beer with you sometime, man.
Thanks a lot, guys.
We appreciate you.
Appreciate you running.
Hey, appreciate you. So long.
See ya.
See ya.